Welcome to the MEFG Global Markets FX Week Ahead podcast with Derek Halpenny, Head of Research, Global Markets EMEA and International Securities. It's Friday, the 29th of August 2025, and joining Derek to pose some questions on the financial market themes for the week ahead is James Roulston from FX Institutional Sales. The following podcast is intended for professional investors and eligible counterparties only, and not for retail clients. Any content should not be regarded as an offer to conduct investment business or an investment recommendation, but for information purposes only.
Hi, Derek. Thank you very much for joining.
Hi, James. Good to be with you.
Enjoying the wet Friday summer or afternoon, even.
Yes, indeed. Hopefully, it'll clear up over the weekend.
Exactly. If you don't mind, I would love to start with a couple of questions on Japan, if we will.
Yes.
Next week seems a little bit busy. We've got LDP General Assembly, and we've also got BFJ Himeno remarks coming out. So potentially quite a volatile week for Japan. Would you happen to be able to start there for me?
Yeah. I think certainly. You know, you've mentioned that speech from Deputy Governor Himeno next week. It tends to be the case with the BOJ that if there's any kind of meaningful communication shift, it's more likely to come from Ueda or the other Deputy Governor, Uchida, or Himeno. So I think in that context, the speech could be important. We had Junko Nakagawa speaking this week. She kind of went along the party line in terms of if the outlook unfolds as expected, the BOJ will have to raise rates again. And we'll get that. That's the kind of standard communication. But we may get a little bit more from Himeno in terms of shifting the markets a little bit more towards fully pricing the prospect of a rate hike by October. Now, I don't think they'll do it in September, so that makes it a little bit tricky in terms of the communications next week. So, maybe next week won't be the moment for that. But I think certainly it's the senior members of the BOJ that we need to look out for in terms of the potential shift or the hardening of the communication. The pricing for October is just a little bit over 50-50 at the moment.
Right.
So I think there's certainly scope for market pricing to shift more in favor of October. And I think the other important development this week was Scott Bessent's comments in relation to, and again, he has said this before, but essentially criticizing BOJ monetary policy as being the root cause of an undervalued currency. Now, the Japanese government at the moment are, trying to negotiate further with the US to lower the tariffs, and certainly the tightening of policy and the strengthening of the yen would definitely play into improving the prospects in terms of trade negotiations. So I think that's a factor as well that needs to be taken into account. So that's definitely key. I think also we have the LDP report on the upper house election failures, and it's becoming less likely, we think, that Prime Minister Ishiba will have to step down. Incredibly, his ratings have jumped significantly. We're talking approval ratings for Ishiba up between 10 and 12 basis points. The Yomiuri poll, for example, was up 17 basis points, or percentage points, I should say. So given his improvement in polling, the political momentum towards getting him to step down has kind of eased off a bit. So I think that report next week in terms of, where the blame should be laid, it may not be as focused on Ishiba as it might have been in the past. So I think that may play into the BOJ as well. Better political stability or less political uncertainty would certainly play into the prospects of the BOJ being able to tighten policy in October.
Okay. And obviously that's all with regards to, we had higher wage increases coming through as well. Is there any sort of, what I want to say is, what are the risks to October coming out of fashion?
I think the primary risk of the markets maybe moving away, or even the BOJ reconsidering on the timing, I think it's probably more broader financial market conditions. Like
Okay.
I am worried, say, for example, and we might speak about it in a moment, but what's happening with Trump and the Fed, going into September, we've had a weak payrolls report in at the beginning of August. If we get another one, and then we get further push on interfering in Fed independence, there is a chance we get a kind of a risk off event over September and October. As you know, James, those are
Yeah.
the 2 months that tend to be quite popular for risk off event periods. So if we were to see that happen and the yen strengthen notably, then that could play down the
Sure.
prospects
Okay.
of a BOJ hike.
Great. Okay, and well, you sort of jumped in there with regards to talking about the NFP. We've got that coming in the near horizon. Like you said, another weak number pushes the more likelihood of, I want to say 50 basis points rather than 25 basis points that's already priced in to the September meeting. Is that right?
Yeah, like 25 calls in September is like 21, 22, 21 basis points priced at the moment. So we're
Yeah.
nearly there, not quite fully there. Um, yeah, like I think obviously if we were to get like the consensus, for example, is I think 70, 78K. So we're not looking for any kind of notable rebound from the weakness we had the previous month, because we've had such a scale of backward revisions to previous months as well. So if we were to get a figure, closer to zero or obviously negative, given Governor Waller's comments overnight, where he pretty much said he's comfortable with cutting 25 basis points, but would consider a larger cut if the employment data and the inflation data was indicative of the need for that, then, obviously you could have Waller and Bowman then looking at 50, and momentum could certainly see pricing moving in that direction. I think obviously still 25 is much more likely than 50.
Yeah.
But we shouldn't rule out the risk even of the markets moving in that direction if we get a very disappointing payrolls report next week.
Okay. And Waller did allude to the potential for, I think the wording was along the lines of one or two more over the next two meetings of 2025. So he was sort of giving us a bit of a timeline looking forward as well.
Yeah, and again, next week is important in that context. If 25 is nailed on for September, you could still start to see the markets contemplate more seriously the prospect of cuts at each of the three remaining meetings. So there's about 54, 55 basis points priced for the whole year. So in other words, 5 basis points in or around in terms of pricing for three cuts. So there's definitely, again, the potential there that the markets start to look at November more seriously again, and then that obviously give the market some momentum in terms of curve steepening, and especially in the context of what happens with Lisa Cook, and we'll get an initial court hearing analysis on that later today. But that's going to run and run, I think, and that to me is extremely concerning as well.
Yeah, just the underlying Fed independence queries that are coming through. It's really being shown in the market with the dollar weakness, but this story doesn't seem to be disappearing anytime soon.
No, and if you consider this year, there's been two periods, two kind of call them moments or brief periods where there was fairly notable market reactions to speculation on Powell being fired, and then Trump has come out and said, no, I'm not considering that. And yes, here we are today, and okay, it's not focused on Powell, but he's basically fired Lisa Cook. She's suing the president, and we have the idea of Stephen Mirren, if Trump is successful, moving into that position, which doesn't expire until 2038. So Steve Mirren is no longer potentially just a temporary member of the Board of Governors. Then you have another pick, And then, of course, you have to pick next year. And, it's now, I think we're in a position where the attempts from the Trump administration to shape the board and the Fed in its own ways is become blatant. And, the dangers, I think, are that we're not fully back into proper trading. We're still in August, about to turn into September. We've got Labor Day on Monday in the US. And it's really only after that we get back to full trading. And if this just persists, I just think there's a chance that we could see some bigger market moves as, the risks on US assets is repriced to take into account these developments.
Yeah, I think you're absolutely right. It was probably about 4 weeks ago that we had the same conversation where we were saying that it's only one seat that was at risk, whereas, like you just said, we're looking at closer to three that could potentially be at risk. So it's a much bigger influence on the market.
It is, and he's written the letter. He's fired Lisa Cook on what he thinks is grounds for cause. Let's not get into the debate about that, but it seemed pretty flimsy on the face of it. But if they're doing that to Lisa Cook, they're going to be looking at all the other board members as well, and probably the presidents. And this could, as you said, James, it's going to run and run, and it's pretty serious.
Okay, great. Thanks, Derek.
And in that context, sorry, I should just mention, we have our updated forecast coming out next week, and I'm not going to give levels on this podcast, but we're going to be lowering our dollar levels because we think this has implications for the dollar, obviously.
Yeah, brilliant. Thank you. And then if we jump across to another sort of confidence vote, but this time in Europe with France. I think it's the 8th of September is the date that I have written down here. So it's not quite next week, but it's starting to play out right in front of us, right?
It is, yeah. So I think, like with Macron's political decision last year to call a snap parliamentary election, the decision of Prime Minister Bayrou to call a confidence vote was definitely another surprise, and we saw the pretty dramatic reaction on Monday with the OAT bond spread widening out. But we're still below levels that we got to. Like, there were two moments last year: the snap election called in June into July, and then the Prime Minister, the French Prime Minister, I've forgotten his name, stepped down in December. Barnier stepped down, and those two events, we saw the OAT bond spread widening out. But when you look at the FX impact, it was pretty marginal. In particular, the big move in OAT bond spreads was in the summer of last year. And I looked at the performance of euro across G10 during that blowout in the OAT bond spread, and the dollar was strengthening anyway across that period, and the euro was kind of mid-table in terms of G10 performance. So there wasn't really any kind of notable impact when the real sudden shock came. This is kind of the third shock potentially, and I think the markets are just a bit more better priced for it. But yeah, it's something that we need to watch. But as I said a moment ago, in terms of implying that we're going to be lowering our dollar forecasts, we don't think it's going to have a notable impact on euro dollar.
Okay. And so in the coming months, I read that there's going to be some more credit rating reviews coming through. I'm guessing that just plays to the ongoing aspect of this. So this isn't just going to be a flash in the pan. There's going to be a continued view on the French budget deficit, right?
Yeah, definitely. And we have, I think it's Fitch in September, so that will come just after this vote. Right. I think on the 12th. So yes, and I think the one thing we can say from all of this is, and this is a known fact for some time, is that we have policy gridlock in France. And we're not going to get great progress when it comes to fiscal consolidation. So the risks are there in terms of downgrades, but I would argue those risks were there last week before this announcement.
Yeah.
It makes it a little bit more likely, of course, especially as expected. The government loses the confidence vote on Monday. But again, I'd go back to the point that it's not hugely new news. And I think investors have kind of priced in the prospect of nothing much happening, at least until we have the French presidential election in April 2027.
Okay, so it's something to watch, but we don't think that it's going to have much of a change in the short term. Well, it's all short term, but we don't think it's going to have much of a market impact.
No, and I think what I've said to clients this week is that we need to just be mindful of any kind of speculation that may build about President Macron changing his mind and considering an early presidential election. I don't think he'll do that. But if that was to happen, then I think it becomes a broader, bigger issue for European markets and certainly, obviously, for France and the euro from an FX perspective.
Okay, brilliant. Well, Derek, that's all the questions I have for this week. Is there anything else that you want to talk about?
No, I think we've covered everything.
Run through, okay.
Yeah, pretty much. Like, we've got an eye on the UK. I just still have concerns there in terms of the fiscal risks, where if you look at inflation expectations or inflation swap rates or break evens, it's clear when you look at, say, the US versus the UK, or that for the UK, the rise in gilt yields is much more fiscal related than it is inflation related. And I think, as I've mentioned on this call as well before, we're seeing the strongest negative correlation between long-term gilt yields and the pound. As they're the strongest negative correlations when you compare it to the other major economies. So those fiscal risks are real, and that's a danger. And I think definitely from an FX perspective, it's a reason to be certainly cautious on the prospects of the pound advancing on a trend line basis over the next 12 months. I think there's definitely episodes in there where we're going to get selling related to fiscal risk.
Thank you for listening to this MUFG Global Markets podcast. Please rate, review, and subscribe to our podcast. Contact your MUFG sales rep for more information. Come back next week for more insights from the Global Markets Research team.